So last week, Walmart, Target, Ross Stores, they all, like we said, earnings season, and last week was retails. Earnings season's around, and all of these stores missed. And it really brought down, it kind of bummed out a lot of investors. And I started to think about it, and I started to dig a little deeper. Why did they miss? You think about these retail companies, and they have to um, it's like moving a big giant ship. They have to plan things out well in advance about what they're going to buy for the upcoming seasons, what they're going to store and bring back out next year. It's kind of like moving a huge freighter ship versus a small, like, cigarette boat. Like, you can't change these things quickly. And with the restrictive monetary policy, with folks, starting to be a little stingy with what they're spending on, a lot of the retail companies, as investors kind of dug down deep into the way that they were running their ship, they were like, you missed the you're not you missed the target, you know? And so I continued to watch the retail space, and I was looking at some of the other companies that tend to actually be a little bit more nimble, like TJX. This is like the TJ Maxx's out there. This is a real well-run company, right? These guys buy a lot of overstock and then sell it at Marshalls and TJ Maxx, and I think it's Home Goods is another brand under their umbrella. And you'll see that TJ Maxx, when they had their earnings, actually it surprised investors and it shot their stock up. I also took a look at Costco. So Costco surprised people at earnings. And so even though Costco was getting pulled down just because it was related through correlation to stores like Walmart and Target, it actually really surprised people and wound up bouncing up, gapping up. Same with BJ's, which is another wholesale company. BJ's surprised. So these more tighter run, Walmart tends to try to be everything to everybody. Where and same with a Target. Target's a little bit more targeted, but Walmart tends to be that store for everybody. Whereas like a Costco, TJX, they've got a very strict mission and they keep their SKUs down. And then the other one is one that we've actually featured. Macy's surprised the heck out of people. And so it was getting pulled down just because it was part of that retail sector. And then they had their earnings, and it was so well, Macy's has, because of their situation, because, brick and mortar is out of vogue, they've had to become like lean and mean. And so Macy's reported, surprised everybody, gapped up big time. And it's actually created for us a opportunity to get into the Macy's symbol so that we could sell premium against it. It popped it right back into its channel. We got our follow through yesterday. So a lot of folks piled on some of their Macy's stock yesterday. Looks like today's another follow through days. So people are either buying some Macy's stock or buying some Macy's back month call options. And I think that that's a great idea, only to wait to see how much it appreciates. And if it doesn't appreciate any more than about $27.50, even $28.50, when it starts to pull back, that's our opportunity to start selling premium and making money on rolling out the protection. So that's kind of right out of my playbook. I think people should be looking at Macy's. And if you're not comfortable with the strategy we've been talking about, gosh, sim trade it, paper trade it, prove it to yourself,